Uses scant consolation to the rest of Europe. Fears are high that the region's stagnating economy could be becoming unstuck from the global recovery. Budget deficits, threats of downgrades, cuts and growth forecasts, all contriving together to unnerve investors. Well, joining me to assess Europe's economic health is Julian Callow. He's Barclays Capital's Chief European Economist. Julian, great to see you as ever. Let's just talk. You were actually quoted by Bloomberg News as saying that Europe has the biggest chance of having a double dip out of all the regions of the world. Why do you think that?
Well, we've still got a relatively overvalued currency, I would say, and the degree of policy stimulus that's been going into the economy has been rather less than you've seen, for example, in the case of the United States or China. As well, I think we've got an area of inertia, really, in Europe. We have these big problems on the fiscal side in certain countries that need to be addressed. There isn't really a very clear roadmap for how we're going to be getting through that particular problem, and productivity numbers in particular have been very, very bad for Europe. In contrast, in the United States, the productivity numbers have been very good. And then if we look at Japan, the industrial side there still looks in quite good shape, particularly helped by some very strong numbers still coming out of China. So Europe really does seem to be stuck in the slow lane. GDP is barely growing at the moment, and that's really why, if there were to be some new form of economic or financial shock, then I think Europe would be probably the most exposed to going into negative territory on the GDP side here.
Deficit problem not helping here either, is it?
Well, that's right. And what is difficult is that it's going to take many years, really, for the high deficit countries to dig themselves out of this, because the experience is not really very good of countries who have a fixed exchange rate and yet they need to do very, very large fiscal tightening.
Julian, let's turn to the British economy and away from the euro area. That report today revising up fourth quarter growth numbers in the UK. Now, does this give you confidence that the British economy is back on track?
Well, I think we have a degree of confidence that the UK economy will be growing better than the rest of Europe, based on the fact that we do have greater flexibility in the UK and we have had a big currency depreciation. And as you noted, that depreciation is still an ongoing issue here. So you have a degree of stimulus there in the UK. Nonetheless, the GDP numbers have been really quite poor, particularly given the amount of stimulus that's been flung at the economy. And we do have some uncertainty that will be emerging with the UK general election in store for May or June.
Currency markets. Initially, we gained against the dollar. Then we've lost over a cent. You know, what are the foreign exchange dealers looking at that has really spooked them?
I think the UK still has a current account deficit, and there's a lot of nervousness as we go into the UK election. We're seeing the opinion poll lead of the Conservative Party narrowing. That's increasingly pointing to an uncertain election outcome. I think people have very different views, really, on what will happen in the summer and how fiscal policy will be working and how that will interact with the currency. So there's not a lot really supporting sterling, other than the fact that it does look very undervalued on most measures right now. But with this degree of nervousness, certainly there is a danger here that it could continue to depreciate, I'd say.
Julian, we're over halfway into the first quarter now, being the end of February. What are we likely to see this time around when we get the figures for growth for Q1? How much will the weather have affected things, not just in the UK, but all over Europe?
I think the weather's a big issue. It's also going to be a big issue for the United States increasingly, it seems. But when we actually look at what is happening in Europe, it will be hitting Germany significantly, maybe subtracting around 0.3 percentage points from the GDP quarter-on-quarter growth rate, for example, for Germany, perhaps hitting Spain as well, where there's been snow already reported this year. So I think there will be an impact from that. At the same time, we do have some significant German fiscal stimulus that will be coming through, and the German manufacturing sector should be bouncing back in January, we think.
Julian, thanks a lot. Have a fab weekend. Julian Callow there joining us from Barclays Capital.